Welcome to PM Express Business Edition. In this time of COVID-19, there is talk about supporting businesses here in Ghana. What is the role of commercial banks in this country? Have they abrogated the support all of a sudden? Or in these times when things are getting tough for these businesses, they are doing what they have to do, or maybe the needful? Well, today on PM Express Business Edition, I'm talking to the Deputy Chief Executive of the Ghana Bank Association, Mr. JoyNews. Does the name ring a bell? We'll take a short commercial break and we'll be right back. Welcome back to PM Express Business Edition. We're talking about banking, COVID-19, and supporting our businesses with the Deputy Chief Executive of the Ghana Association of Bankers, Mr. JoyNews. Sir, thank you for welcoming us to your offices today.
You're most welcome, as always.
How are you doing?
Very well, except you know that we are going through some tough times. So apart from that, everything is fine.
Let me backtrack a little bit, because we knew JoyNews at UMB, then he got lost. The next thing we heard was that there was a press release from the Ghana Association of Bankers of you being appointed the Deputy Chief Executive, and you would formally take over very soon as a substantive Chief Executive. So why the switch, or what happened? You got lost in the system.
No. Of course, careers have their own trajectory and track. And if you followed me well, you would find that I have not been one of your very, very, long-standing person sitting in one seat for decades and decades. No, I believe that as a stage, you come, you do what you can do, you do the best in the circumstance, and then you move on. You find I moved from Standard Chartered, I went to UBA, from UBA I went to Barclays Bank, from Barclays Bank to EcoBank Capital, from EcoBank Capital to GCB, then to UMB. So it's not been just about UMB, it's a matter of career movement. And I thank God that every part of this movement has been very good, and as you can see, I'm a very happy man.
I thought that moving from UMB, you would hop to another bank. That one day we all woke up and heard that news. Why the switch into more of an executive administrative role as the Ghana Association of Bankers?
And I recall we've had these discussions before.
And that day I tried so much to get in touch, but you never picked my call.
You were not alone. but the point is, there's so much to be done here. As an industry, we've been behind the scene for quite a while. And when I was approached, that John, we believe that we need somebody who has been there before to take the helm of affairs and be the voice of industry. I saw it as a huge opportunity, not just for me, but for what the industry has done for me professionally. And it's a way of me also paying back for the kind of, career that I've had in the banking industry. There's so much to be done at the industry level, making sure that there is one voice for the industry, and the issues that affect practitioners and market participants get the right visibility and escalated to the right quarters. So it's not your routine kind of administrative role. It is more a frontline activity than you would think.
More of an advocacy role, I should say.
It's advocacy, it's about being the voice of industry, it's ensuring that industry matters receive the right attention. It's everything, just like managing a very big bank.
I know this is something that you've always said that you've moved on and let's forget about it, but I know that there's one question that I've always been dying to ask you. So why the move from UMB?
I think I've answered that question. As a personal policy, I don't tend to discuss my transitions because corporates are entities and Ghana is a very small place. So I try to stay glued to the organizations, and as you can see, I'm very good with them. I had a meeting with some of the board members since I've left. I've had the CEO is a very good friend of mine, and we talk every now and then on industry matters. So I like to keep it at that level and not to meddle. It's an organization that is still operating, and I would like to keep it.
At the association level, you'll be working closely with them?
I'm working with all the banks.
But there is something that you really wanted to do, because again, sorry for backtracking again, somebody who has been in active commercial banking, and I stand to be educated. And sorry, you look quite young, even though maybe you might be old in age and all the rest. So maybe there were more years ahead for you to still practice as a chief executive of any industry, of any commercial bank. There are still banks out there moving every day, trying to poach here and there. Maybe, I knew that there were a lot of offers that came your way, right? But you decided not to.
Of course. I mean, I've been approached by a lot of, some banks, institutions. But the point is, when this interview is over, I'll show you a text message I sent in 2018, early 2018 or late 2017. To the president of this association, when I was still the managing director of a bank, years before I left, I said, one day when I leave the bank, I would like to run this association. Why did I say that? Because I thought that there was so much that we could do with the association to carry it from where it had been moved from in our days in 1980 all the way to 93 when Mr. Mensah took over, and all the hard work that he did to this level, and we thought that it is time to also take it to the next level. So my interest in taking this role was actually expressed when I was still a bank managing director. And I'll show you that text message.
And you were working actively towards it.
Yeah. I mean, the thing is, once I had that discussion with Mr. Ndani, as soon as they also had a decision on trying to find somebody of industry experience who has operated at that level, because you are working with CEOs, he just picked up a phone and called me. I said, John, I remember you told me this some time ago. Are you still interested? I said, yes, we can talk.
You came in as a deputy chief executive, and the plan was that gradually you warm up to the substantive chief executive by the end of the year. I stand to be corrected, or even before that. Mr. DK Mensah, Mr. DK Mensah, how did you take the news about the time that you were coming in just for the transition to go on, for him to pass on things to you? Then he kicked the bucket.
Yeah, I would say it is one of the saddest days in my entire life. I had a fantastic working relationship with Mr. Mensah. First, from my time when I was at the bank and I was the CEO of UMB, I was then the treasurer of the association. So as the treasurer, I was in direct link with him on almost everything finance. So we used to work very well together before I left the bank. And then when I came back, if you know DK very well, very affable and accommodating, and I don't want to say too much because it brings certain memories that I don't want to shed here. But the point is, he paid his dues. He did very well for the industry, for the market, and for financial services in general, for the country and beyond. Tributes are coming from the West Africa Business Association, from London, from all over the world, people who have heard, people we have not informed, but they have just heard, well, institutions we have not informed. So it tells you the kind of person that he was. As for the transition, it was a matter of course, because I came in as deputy to take over from him, and it was no news anymore. I had actually been around when the announcement came. I had been around for about 4 months before the announcement, because we wanted to keep it low, but then COVID came, and there were times I had to come out to speak to media. And when I was speaking to media, in what capacity are you speaking? And that's why we had to come out at the time we did. But he was a fantastic man, and if you really worked with him, you would know that he's a father, colleague, and everything that you would want to have. It's so unfortunate that it happened the way it did.
And may he rest in perfect peace, and even as we express our condolences, family and the entire banking industry. But some are saying that his shoes are quite big. The stakes are very high for you, don't you think so?
I think I'm very much up to it. The point is that once this chapter of our history is over, we will hear a lot more from the association.
How is the industry doing? I mean, if we base ourselves on what the Bank of Ghana puts out, a very interesting result, but away from the numbers, how is the banking sector doing in COVID-19?
I think you've answered the question. The person who
let's move away from the numbers first, and let's talk about how things are going.
Generally, I think the CEOs or the MDs of the banks have been very upfront. And since the advent of this COVID, we've been very cooperative. We've been working extremely well together. We've had, I think the meetings we've had this year alone is more than 2 years worth of meetings, just so that we have an industry strategy, and banks do not go their individual, silo way, and we can have a consolidated view of what needs to happen. And since March, when this pandemic became a big issue, that is what we've been doing with the CEOs, we've been doing with all our major stakeholders, Bank of Ghana, and the Ministry of Finance, and all other active participants that we work with in the course of our job here at the association. I think MDs have been very stable, and what they have said is, in all the discussions, we need to ensure that the market is stable. Financial stability is critical in times of crisis, and that is what, as an industry, we are really, really focused on.
You talked about consolidated level and all the rest. How together is this association, or we still have an association? It might come across as an association, but some would say that maybe you are not together as we all want to believe.
I haven't seen anything to put me to doubt.
Are you more of a united front as an industry?
We are 100%. When it came and COVID came, and as an industry, we took a decision that it is not just a health issue, it is an economic issue and even a social problem as well. So we came together quickly, and if I tell you how long it took for us to set up a 10 million fund, which the association did not have, but members quickly contributed, and overnight we had 10 million Ghana cedis in our accounts to enable us also, take care of some of the interventions that you heard of us in the media that we had done. We gave $380,000 to Noguchi to buy test kits. We gave 2 million Ghana cedis to the private sector fund towards the construction of the infectious disease 100-bed infectious disease center. We were very key and critical component of that. During the lockdown, we were feeding homeless people with hot meals in the afternoons or in the daytime. And when we realized how beneficial that was, we extended it to households, where we distributed in excess of, I believe, 5,000 or 6,000 food packs to needy households, to feed family of about 4 people in the family. And we know we didn't have the database to do that, so we used the faith-based organization to help us in the distribution of those relief items. We gave money to doctors in residence. We gave money to community water and sanitation. So the association has been strong because we have all these banks behind us, not one singled out. They were all united in what we wanted to do. Even when it came to what we had to do in response to what the governor announced, the measures the regulator announced, it was a united front, and no bank deviated from that.
Let's come to, this can be classified as a corporate social responsibility, but let's come to supporting businesses, which some would say should be your stock and trade as banks. Where are all these funds going? Because there are some businesses who are still complaining that we're struggling to get funding from the banks. And the recent Ghana Statistical Service business tracker again highlighted not just about cost, but access to credit was a major challenge for businesses. Where are these funds going?
It's going to
in terms of lending. I see the numbers, and we've set aside 3.5 billion Ghana cedis. You're supporting businesses, you're supporting industries. Unless those businesses that are being supported are not talking. And if we are not going to even restrict ourselves to the hearsay, the Ghana Statistical Service did the business tracker survey, and access to funding was a major problem for these businesses.
Funding is always...
In terms of even in the COVID-19 era.
No, in the COVID-19 era, businesses, I know when we are talking about these kind of activities, we need to, put them in context. Okay. You understand? During crisis and uncertainty, as we have seen, introduced by the COVID-19 pandemic, what is the most legitimate stance of banks is to say that the credit taps have been locked. We are not going to take a hard stance. We take a hard stance and say we are not.
Right now.
Very, very far away from that. And I'll give you the statistics to back that. We realized during this period that not only are people unable to pay in terms of in the sectors that have been significantly affected by the impact of the pandemic, but even businesses that are that have their feeds from these other sectors have also been negatively impacted. So banks on a case-by-case basis have sat with these businesses, and I can tell you in excess of over 3.5 billion Ghana cedis have been restructured. And it is not gross loans restructuring. These are payments that should have come to the banks as liquidity inflow. I'm coming, just one moment, just so that that point is very clear, because you are not the first to make that point. And we want to send that message out about what the banks have done. These are businesses that have had contractual obligations to make payments to banks. And banks said, we understand your situation. We know that your cash flows have been depressed. If we want to insist on contractual obligations, we'll be killing your business. Come, let's talk. Let's see how best we can help you to reprofile your debt, to see if it is possible to give you some payment holidays. And banks have done that. Some got 3 months, some got 6 months, up to some getting as much as 1 year of repayment holidays. And that is that. Aside that, new lending during this crisis is in excess of 3.5 billion as of June, middle of June. Banks had approved facilities before COVID, advent of COVID. Some customers had met conditions, but they had not drawn down. So what do you do? Normally, when it happens like this, you just go and say, no committed lines. We always have the prerogative to recall funds or to say that we are no more disbursing. But banks said, you know what, so long as you can demonstrate use, and we know that that use is going to result in cash flow generation, which is coming back to make the payments, the taps have been open, and businesses and individuals have been able to draw down on lines that were approved even before COVID. And as I speak, banks have over 2.5 billion in committed lines awaiting drawdown. So, yes, you listen to the governor. He told you about the increase in lending to the private sector. So, when I hear, as for issues around availability of funding, it is not because of COVID. It has always been an issue of where are we? When you talk to a business, you say that access to funding is a problem. It's not just in Ghana. Worldwide, access to funding is a problem because funding is a
it might be like a cliche or something, but I also want to base my question on the Ghana Statistical Service and their business tracker survey that was done recently that highlighted that even for some business, majority of them, they didn't even know that there was a government stimulus package for them. And I'm saying that unless these lines are going to, or these facilities are going to your most credit-worthy clients, then I ask again that where are these funds going?
And I'll repeat myself.
Not mentioning, but even sectorally as well.
It's going to the active sectors of the economy. During COVID, it's going to factories, it's going to services, it's going to SMEs, it's going to pharmaceuticals, it's going to all the places that, we used to give money. And in more so because, we got some regulatory reprieves, we were directed, actually. The regulator said, this reduction in CRR, we don't want you to be playing around with it on the interbank market or putting this money. This money should go directly into lending. So that is exactly what banks have been doing. And I can tell you, the point is, if 15 people apply for a facility and 13 people are approved, the 2 who complain will get voice. But it's 2 out of 15. You understand? So it's a matter of numbers and relativity comes to play. So it is difficult when I'm not clothed with the data sources and the kind of questions that were asked to really get to a proper understanding of why people are still having that consideration. Because from where we sit, we see the banks are actively
are they not going to your best clients, your most credit-worthy clients? And not those SMEs who are the engine of this economy?
You see, if you have an exposure to a customer, whether the customer is the best customer or is a not so good customer, you have one prerogative, is to get money back. Make sure that money that is gone out of the bank in terms of financial exposure, there is recovery. So it is in the interest of banks to ensure that across the network, every customer is happy. Not that your best customer is the only customer that is happy, but every customer grouping is happy because every exposure is exposure. And impairment doesn't know names. When impairment is hitting you, it can hit you from a very good customer whose business has been disrupted. And it can also hit you from a customer who was already not so good, and this has worsened their business chances or cash flow dynamics. So as an industry, we do not do this pick and choose when we are in this kind of crunch period. What banks are doing, and that I will say, because we are coming from history, And what banks are doing now is to ensure that lending is done with the eyes properly opened and the money is going to where it's supposed to go.
From since the lockdown in March and maybe, let's say, to July, can you give us some figure? You explained earlier on in terms of the real lending that has gone out. Is it still at 3.5 or 4 billion or 5 billion?
We haven't updated the numbers yet, but I can get it later.
Maybe what about to June ending?
Yeah, we haven't. The last data point was as of June 19th, and that is what I gave you.
And that was the 3.5 billion?
That was 3.5 billion. In total, it was about 7.8 billion. And I told you, as a result...
Can you break down for me, help me out, as in the fact that...
So there was 3 billion in liquidity that should have come into the banking environment that banks said, we have reprofiled, we have extended or given payment holiday or moratorium.
We're supposed to pay back 100,000 Ghana cedis.
In April or May, we say, you know what, because of your situation, maybe start paying in November. And that was 3 billion. There is 3.5 billion in new lending. New lending, that is during COVID, in the heat of the pandemic, banks have, between March and June, this is between March, virtually less than 3 months, and middle of June, had given out in excess of 3.5 billion. And as I said, the banks also had committed lines. These were lines that had been approved before the advent of COVID.
So these were monies that were been approved for maybe Dr Mensah at Makola, maybe 10,000 Ghana cedis.
Yeah, but he was maybe meeting disbursement conditions, or had met disbursement conditions, but awaiting the right time to draw down. Then COVID happened. What would you have done if you were sitting in the chair of the bank managing director? You say, hey, Dr Mensah, can we talk to her again? This money, what is she now going to use it for? But on a case-by-case basis, banks have allowed drawdown of this to the tune of in excess of $1 billion. So, and I told you about another 2.2 billion in new committed lines during COVID, apart from the drawn facilities that banks have now approved in the middle of COVID. And as of June 19, was about 2.5 billion.
And which sectors have these monies they've gone to? Yeah, sorry.
It's primarily gone to the productive sectors. We had focus, and big focus on pharmaceuticals. When it comes to restructuring, the beneficiaries have mostly been in the leisure industry because they've been severely hit. Hotels, your transport businesses, aviation, and the like. They have had their facilities either restructured or reprogrammed. So that now, a lot of hotels still are not open. If you are not open, and that is the source of the cash flow. And if there is no cash flow, the bank will be, in fact, will be daydreaming if you give money to Hotel A, and Hotel A is closed down not because they are not doing the right business, but because of circumstances outside of their control, and you are still insisting that they should make payment. So banks have sat down with these institutions, and those have been reprofiled. And they have also given new lending to the pharmaceuticals, to SMEs, to services, to transport, and to all the other actors, even to households, individuals. I have received calls from individuals who have had personal loans restructured. I hadn't actually heard it before, but personal loans, when it is like I want 10,000 cedis to maybe buy something, bank doesn't even ask you what are you going to use it to buy, but by virtue of your payroll, they be coming through the bank, they give you that money. They have had cases or instances where personal loans have been reprofiled because the person's pay may not be as consistent and regular as it used to be before the advent of the pandemic, and therefore banks have responded accordingly.
Well, I'll be getting back on, these are shareholders' funds, these are creditors' funds, these are not free money. How do we draw the line between being conscious in these times and having the CSR mind and supporting the economy? Are you also ensuring that these funds are directed to the right areas, and also at the back of your mind, the ability of these firms to also pay back? This is PM Express Business Cities. You're looking at supporting businesses in these times of COVID-19 and even post these restrictions. Are the funds coming? We've heard him. Are they going to those critical sectors of the economy? Maybe they say numbers do not lie. Or in these times, are they or not? We'll take a short break. We'll be right back. Welcome back to PM Express Business Edition. We're looking at supporting businesses in this time of COVID-19 and even post-restrictions. There are some who have actually complained that, listen, we're struggling to get funding from commercial banks. I'm also saying that, what are you talking about in terms of interest rates being reviewed? I haven't seen that. Well, Johnny was the Deputy Chief Executive of the Ghana Association of Bankers, and very soon will be the Chief Executive of this association. But we are talking about lending, and I'm asking you that these funds are not free funds, right?
Yeah.
These are funds that you also borrowed from other institutions. I hope that they're also doing the same thing for you. What are your members telling you that whilst we are willing to accept the governor's call, whilst we are willing to lend to businesses, these are also not free funds? And how do you draw the line in ensuring that whilst you lend those 100,000, 200,000, 500,000 out, due diligence is being done to ensure that this money is going to be paid back?
Yeah, of course. You're absolutely right. And I told you in my earlier rendition that banks have the benefit of recent history playing out before us. And it would be very reckless on our part to, recklessly be doling out money that potentially will create problems for us along the line. We have concerns as an industry, I must say. We have concerns about potential impairment along the line. There are businesses that are showing signs of weakness now, and we are only projecting that this pandemic will ease out, and the businesses will begin showing some positive cash flows to enable them come back to business. What if that does not happen? What if by March next year we still have the virus with us? We cannot, as a financial institution or as a business concern, keep on restructuring and reprofiling. It has implication for impairment assessment in line of IFRS 9, and it's also in line of the regulatory requirement. So as we speak, we are seriously in discussions of the banking regulator on how best to weather the storm. That aside, in my view, coming from the association, we have to also begin engagement with our external auditors. I know this is happening in other jurisdictions where there are serious discussions going on around assessment for impairment, for instance. Are we going to stick to the books as rigid as it is in the IFRS considerations, or are there considerations that are going to come out from the setters, the standard setters, or as a country, are we going to have a position? These are all emerging discussions. It's difficult to say where we are, but I'm telling you that it is seriously at the table, and engagements have already started. So we are concerned. We are not, much as it is almost like a duty to help with nation building and help fuel or oil the wheels of the economy, we are also concerned that it can potentially create some level of deterioration in asset quality along the line, and industry players are very much mindful of that, and much as they are doing what they are doing it, as I said, with both eyes open and with all the risk parameters in considerations. I know most of the banks have factored COVID considerations in their credit risk appraisal methodologies, so that the new loans that they are writing or they are sanctioning, they are COVID compliant or kind of have some considerations taken in line with what if around COVID considerations.
Talking about concerns, I mean, these measures from the Bank of Ghana, this directive from the Bank of Ghana to help improve liquidity on the market, is this something that your members wholly embraced, or maybe at this time you all want to be Mr. Nice Guys?
Oh, no.
It's come with some concerns, actually.
Yeah,
you want to be Mr. Nice Guy, so of course we fully embrace it, and let's go out there giving money to people.
No, it is not a matter of being Mr. Nice Guy. It's a matter of helping to solve a problem. We have a national crisis before us. So there are two ways. You can be part of the problem, or you try to be part of the solution. And I think banks have gone on the side of solution, and the central bank or the regulator has also been on the side of solution. So it is working together to solve an industry issue, an economic problem. So it is, yes, the regulator was fast in coming out with the measures, and the measures resulted in banks ability to reduce even our interest rates. I told you that interest rates have been reduced.
What are the rates now? Is it the 21 on the average, or again, these are for high net worth clients?
No, I mean, historically, interest rate is, risk driven. It is your risk profile that determines the interest that is applicable to you. But on the whole, interest rate in the industry this year alone has come down all the way up to about 350 basis points. And I can tell you that most corporates are borrowing below 20% at the moment.
So let's just do some rough estimation here. So for the big size, good credit history, how much are they taking?
I can't
not
be
specific.
I can be specific, but so I said good corporates, as we're saying, good size, good cash flows, good credit. It is sub 20, some sub 18. You understand? And then we have those in the middle, which will be around maybe 19 to 21, 22. Then we have the personal loans and the rest, which will be around 22, 23, and thereabouts.
What about the SMEs as well, the range with the good credit history and all the rest? For these small
if you're good credit, it doesn't matter where you belong.
Okay, so
you understand? Good credit is good credit.
Look at the SMEs. I mean, what are we looking at? The range, not specific, because
I would say it will be lower 20s.
And during this COVID again, have these rates been revised to help these businesses borrow?
Yes, as I said, in response to the reduction in the cash reserve requirement by the Bank of Ghana, on average, industry rates, lending rates have come down by up to 350 basis points.
Some are still saying that our rates are still high. I mean, if you want to look at even the Ghana reference rate, if you want to look at inflation, if you want to look at the rate at which government is borrowing, all these indicators, I mean, why are we not seeing the commercial banks respond accordingly?
When people talk about the interest, you can't look at just lending rates in isolation. You need to look at the economy, you need to look at the other variables, look at the cost of funds, look at the risk-free rate where it is. You understand? If government is borrowing at 14% from the treasury bill, that is where maybe around 13.5, 14, but the benchmark is 14. That is your risk-free rate. You are not going to lose money if you buy treasury bill. If I give money to you, there is that likelihood that I could lose money. So by the time I price for risk premium, just a little above it, what rate are we looking at? And we look at the impairment regime that we have now, average non-performing loans that we've recorded over the period. We need to as holistically look at all the variables that go into the pricing to the customer. And when you put all together, banks don't make their profit from the interest rates. They make their profit from the margin between the cost and then the lending rate. So it is a spread in between. So it could be 2% cost of funds and lending rate at 7%. It gives you 5% spread. Okay. It could also be cost of funds at 16% and you lend at 20%. It gives you the same spread. So banks are not overly interested in extremely high interest rate, because extremely high interest also contribute to default rate. You understand? The higher the interest, the higher the possibility that the customer may default.
But someone say that it doesn't come across like that.
It does, because as I said, banks do not make profits necessarily from the lending rate. They make profits on the margin. It's a differential rate that we are talking about here. So it could be, if cost of funds, if you were giving money to a bank in a fixed deposit and you are prepared to take 2%, a bank will be willing to lend that money at, say, 6%. But if you come and you are requesting 14% for your fixed deposit, by the time the bank also adds on the risk premium and everything, you are heading to exactly where the banks are now. And now there's a lot of transparency around in lending rate setting because of the reference rate mechanism that the central bank has put in place. Banks are now benchmarking their lending rate to the reference rate. So once the Ghana reference rate is coming down or is moving, whatever direction it moves, lending rate is also moving in tandem.
You think that as an individual now, I'll be more empowered to negotiate with my bank in terms of cost of credit?
Exactly, because now,
hitherto, to me,
hitherto,
been the case,
hitherto, you were comparing apples with oranges, because you're looking at bank A base rate against bank B base rate, which a lot of the differentials in the variables that go into determining those base rates meant that you could not effectively compare these two banks. But now there is one benchmark rate, which is the Ghana reference rate. So if we are all using the Ghana one rate as the benchmark, and you can go to Bank A and get loan at 17% or 20%, and Bank B is giving to you at 24%. So you need to ask Bank B, what kind of risk profiling bracket am I in for my rate to be at 24%? You can have that discussion. Because Bank A is telling me, from all the things they know about me, I can qualify for lending at a rate of 21. It's also driven by where is this bank getting their funding from. You understand? So if a bank is predominantly funded by wholesale funds, then you are likely to have a bit, a lot more expensive, or the cost of funding will be higher than if a bank was widely spread and had access to a lot of retail.
The governor of the Bank of Ghana today at a Gimpa Law Conference program, in his remark again, expressed a certain concern that he sees high non-performing loans or default rate as maybe the biggest threat to this industry in this COVID era. I mean, what do you make of his concern, his expression that the fact that there's a bandwagon or a call for us to lend support? What due diligence are we doing to also ensure that we lend to the right people, and the ability of these firms to pay? Or this COVID thing stretching so much that George counts for $1 million from you, and I will struggle to pay back, and that is where the concern is.
Yeah, the environmentals are a factor, and the governor is right. And I told you earlier,
the biggest fear.
It's the biggest fear that in post-crisis, are we going to see asset quality deteriorate? And it is a big concern for banks when asset performance is shaky and you are not sure about. In an uncertain environment, clearly nobody is able to put a handle on exactly what the direct impact of COVID-19 is going to be, both on the economy, on industries, and on even on you and on me. You understand our ability to even pay school fees going into next year. It's all part of what is going to happen. Is it going to be such that things will be so disrupted that maybe Joy FM is going to say, half my people, you know what, I've had enough, now it's time to consolidate. Can we have a discussion? No. So what banks are doing with all this behind us in terms of the fears around potential impairment is also to make sure we do not contribute to the problem by taking wholesale decisions around we are not lending, we are not doing this, we are not. No. It will be a disaster. So what banks are doing is saying, certain Mr. George Mensah is sitting in front of me, and he wants 1,000 cedis. What is he going to use this 1,000 cedis for? What is going to use the 1,000 cedis for? Is it going to enable him to pay back within this scenario that is playing out before us? If the answer is yes, banks are not going to say, because of COVID, we are not going to give you the money. And that is the point I've been making. And I made the point in an earlier program this morning that banks are not giving money or are not lending because you have collateral. We are lending because we believe in the venture you are using the money for. Collateral comes as a second way out, or that's why it calls collateral. Is in the unlikely event that the things we have agreed together that you are going to do, in the unlikely event that it does not turn out the way we planned, then we can rely on that. But our prerogative is when we give you money, the money must go work and pay back. And that's what banks are doing.
Let's come to the bit about the non-performing loans again, because again, some are saying that the concern is also about the due diligence as well being done, because if you look at the books of some of the banks, you know that indeed they hadn't done much work in ensuring that these funds go to the right sectors, the right businesses, and also ensure that these loans are performing.
Due diligence is, again, a factor of the country. When I say the country, what do we have? The economy, the environment, collateral, registration, the legal system. It's all part and parcel of it. Banks have given money knowing that the customer has X title to a certain landed property. By the time facility is showing wobbly signs and bank wants to realize, you go there, property is, you are holding original document, property is no longer there, it's sold. And these are real facts. It's facts on that. So no matter how best mechanism or whatever mechanism you use in assessing your credit in terms of your due diligence, there are other third-party systems you definitely have to rely on, and you are relying on them knowing that those systems should work. Unfortunately, things have not been rosy in those kind of environments. You're talking about even individuals, people taking loans from banks, they are living in house A. The next day, they are defaulting, they have left their job. You go to house A, they no longer live there. Nobody knows where they are because they are not tagged to their address, and nobody knows where they are.
Don't you think that the targets that you're giving to some of your officers, your credit officers, also the fact that some of them are also being reckless in all sort of cuts and deals and all those things. So that is where the problem is, and not about the externalities.
No, in fact, the potential, of course, if you give a strenuous target, you are likely to push people to do unconventional things.
That is what is happening.
That is not what is happening. I'm not saying that it's across. It's a basic tenet of performance management. You understand? Targets must be aspirational, but not overly aspirational. So I'm not saying that you should not give stretch target, but you need to be careful what kind of target to give to your people, because potentially it can drive them to do certain things that may not necessarily fit into your corporate objectives and may potentially hurt the business. But the point I'm making about the default issues and the due diligence matters that you have brought out is some of the ancillary institutions that we rely on in our due diligence have also failed. So it is not just about the bank. Some banks have, a bank can give you a typical as a bank may have collateral, may have registered the collateral registry. Just to realize you can spend another 3 years in court, but the depositor doesn't have 3 years to wait for his money. And that is what will bring a stretch on a bank if you have a critical, chunk of your exposure suffering from scenarios such as that. So yes, there's been issues with the sanctioning regime in some banks that we've all been, now from all the things that have happened and reports that have been shared, yourself and other media platforms, by the regulator, by the administrator and the receivers, they've come out with a whole lot of things around governance and the rest, that now with the new governance framework in place, banks are seriously complying. But the point is, there are other ancillaries which are not within the bank's control and which also sometimes result in default that or result in incidents that banks cannot properly do due diligence.
I look at the non-performing loans rates or ratios, and some are saying that it is still quite high. For you, what is the best approach? Is it legal? Is it ensuring that, listen, credit to go to only those who are good? What is the best way in dealing with this? Is it having the specialized court? Or some are saying that it's the function of the economy if things are good. But we had times when rates were low. We had times when the economy was good and the credit grew so much, but people didn't pay. People were running from changing their house. Is it a human thing? What is the best approach in dealing with this non-performing loans?
So I think,
which is some would say it is very high.
It is high, but okay, it's high relatively. It's better now than it used to be, but then it is very high.
Ratios
You're right.
Numbers, they are quite high.
Yeah, of course, yeah, they are high. And I think you answered by the question yourself by asking me the question. But the point is a multiplicity of all the things that you mentioned. The credit culture in this country is not good. I can say, having sat where I've sat before, I can say that it is possible that some businesses or individuals come to banks or financial institutions, take loans, and may not have the right intention of how to use the funds. So you see, they say the intention of a person cannot be tried. You don't know, as you are sitting, I don't know what is in your mind. So I can only relate with the kind of discussions we've had and the documentation that you present. And if you do not demonstrate that good faith, and I'm supposed to rely on the discussions that we've had. We had a situation where people have not been faithful. Not because the business is not good, but they took the money and bought a new car. They took the money and bought a new house. Meanwhile, the money was supposed to go into new plant line, or it was supposed to go into working capital. So culture is one. It takes two to tango. Banks have done, the sanctioning regime. We are still tweaking here and there, making sure that it is robust and robust and robust. But it takes the other party to also come to the table. You talk about even institutions that have signed documentation to say, oh, when staff is resigning, we will notify you, the bank. And people have left the institution and the banks have not been notified. So we are not sure where these people are, and it results in default.
I'll be getting more about in terms of the governance issues as well, and also what real help you are offering to businesses in these times to guide in the disbursement and credit extension and all those things. When we get back from this break as PM Express Business Edition with Mr. JoyNews, the Chief Executive of the Ghana Association of Bankers. Welcome back to PM Express Business Edition. In these times of COVID-19, how are we supporting businesses? Are we going beyond just the good credit score to ensure that those who need funds are supported? And beyond the credit extension, what are the banks also doing to support these firms, maybe in terms of technical advice or credit advice to these businesses out there? Mr. Wua, let me also ask you a bit about, in terms of we're talking about NPLs and how they're doing and all the rest. How are you also ensuring that not just the credit extension, but you offer real support to these businesses in these times? Because you might have the best of credit people, advisory and all the rest to support businesses in these times.
Yeah. So when we had our interaction with the MDs, I think it was one of the issues that came up, and that's the early part of, somewhere latter part of March. And basically, that was exactly the decision that was taken at the association level, that this is the time to touch base with our clients and understand them, to work with them. There are some clients that may feel a bit jittery and may take some suboptimal decisions now, which in response to COVID, which may not be good or in overall interest of the organizations. So yes, that window is there. Banks on radio have been informing their customers that talk to us. If you have issues, there's anything to discuss, call this number, call that number, and talk to us. It is only by talking to the banks that your problems will be highlighted, and if your facility has to be reworded or restructured in one way or the other, then the bank will know. So it is, yes, the bank reaching out, but for customers also making approaches to the bank to let their bankers know and understand exactly what situation they are going through.
One of the issues that led to the recent banking sector cleanup, which is all on our minds, were governance issue. Recently, the Bank of Ghana came out with a report which suggested that there were bank staff that were conniving with fraudsters to defraud customers with this mobile money transactions and all the rest. When I saw that report, there are some out there who think that, listen, we are not over. These things are still going on in the industry and the bubble would again burst. The bit on the mobile money issue, what do you make of it? Some are saying it's serious.
You see, one thing that COVID-19 has helped in terms of the other side or the benefit to COVID-19 is the adoption of digital transaction on digital financial services platform, and one of it being the mobile services. And of course, once there is that volume or quantum growth on that platform, it arouses the interest of miscreants in society who would also want to take advantage of that situation. Increased adoption of technology comes with it the risk of cybersecurity and cyber risk, if I should put it that way. So much as we are concerned, a lot concerned about what is going on, we believe that we need to rather focus more on the house and the fixing of the problem, because it is to be expected that once the volume of transaction or the transaction flow on technology platform is all of a sudden moved from A to K, there's that potential for people to try and take advantage of that quantum growth. So I know Bank of Ghana has this cybersecurity guidelines that banks are supposed to be working with. Banks have invested heavily in cyber platform of cyber infrastructure, but as it is with all miscreants, they are always one step ahead of the infrastructure. So it is your ability to, I think it is getting a lot more coverage, a lot more focus on, because the bank systems are catching the fraudsters. So the reports have not been that the fraudsters have been successful.
But if I go through the report again, it highlighted that there were individual staff in these banks that were collaborating with these fraudsters.
I cannot comment on that.
That came from the governor?
No, I cannot comment on that because I have not seen that report myself.
Yeah.
But of course, we are working with individuals, and if you have 1,000, 2,000 people working for one bank, there is that possibility that one or two people may become, wayward or miscreant. But it does not define the governance structure of that institution. And as I said, this thing is coming up prominently, and the issue has not been that the fraudsters have been successful. It has been that they have been apprehended. In a lot of the instances, it is because the bank systems have worked and the fraudsters have been apprehended.
Is it greed, or maybe the banks are just not paying their staff?
You are still pushing me to say
that. I'm not mentioning any specific because it was an industry issue.
Yeah.
And since you are the CEO of Ghana Bank Association,
yeah.
Someone saying that is it greed?
What I'm saying is
some of your members are not paying their staff well.
Fraud, in whatever form that it takes, is a matter it's completely unjustified. It's a matter that is worry any practitioner in the banking industry. So we are concerned that cyber fraud is operational risk of fraud or whatever other fraud, mis-selling to the customer or whatever form that it takes. It is appalling and we do not condone it. So I wouldn't say that banks are not paying their staff well, that's why that is happening. But what I'm saying is, unless we can lay hands on exactly what happened in the specific situations so that we can properly comment on, we, from where we sit, see it more from a governance perspective that banks are doing everything they have to do. And it is the structures they have put in place that is resulting in these kind of instances where people have attempted and they have been apprehended.
That's a promise? Or that's a promise?
Well, yeah, no.
Or you are working that it will minimize it or it won't happen again?
The thing is, you cannot say fraud will not happen again. It will definitely be, you work towards making sure that it doesn't happen, but it is difficult to say that you have zero and you have planned zero. It can never happen. But when it happens, when the fraud happens and there's an attempt, do you have the right systems and structures to immediately arrest it? And from where we sit, that is what the banks have done. And in most of the instances that you talk about, it is not because the people have run away with cash. It is because they went and were trying to draw cash and they were arrested.
You see, there was another report again that talked about the fact where banks were overcharging, they were going contrary again to what was documented in loan conditions and all the rest. When people hear some of these things, they are always suspicious of the bankers. And in a time where we are trying to, again, bring in more people outside the banking system into the banking fraternity, this was not a George Yafi doing a story saying that my sources, but it came from the Bank of Ghana. It is worrying.
Yeah, it's worrying, but the point you have to take from here is, as an industry, we take customer service very seriously. We are a service organization or a service industry, and therefore matters that affect the customer in terms of treating the customer fairly or unfairly or promising the customer A and delivering B are matters that are of utmost importance to us at the association level and at the individual bank level. And I know I'm not sure there is any bank in this country that does not have a semblance of a service council where instances such as what you just brought up receive attention at that level. And for all the banks that I have had the privilege of working with, such reports get visibility of the board. It goes all the way to the board. And they take
it.
action. And people have lost their jobs. People have been sacked. People have been reprimanded. People are going through the court system because of instances such as that. So, yes, that report was issued. I cannot speak to the specifics because there were 8 banks. We have 23 banks. There were 8 banks that the report covered. And until we are privy to the exact instances of those kind of abuses, it is difficult to comment.
How is the industry seeing post-cleanup regulation? Or there are some who think that the Bank of Ghana is being too strict. It's more of a headmaster and a student. How are your members receiving regulation post-cleanup?
What we've seen is it is in our own interest that when things are not going the right way, you are kept back on track. So yes, excessive regulation can be expensive and sometimes can also disrupt service. But it is in the interest of industry, particularly coming through COVID and post-COVID, that we remain very tight in our governance, in our compliance levels, AML, CFT, and everything to ensure that we stay in line. Because it is in chaos that we have the operators, miscreants, and the rest festering. So as an industry, we are interested to work with the regulator. What we, banks as banks, perhaps we would want more is a lot more kind of collaboration with the regulator so things are not coming just like that as it goes to the media, it is coming to us. But then if we know of it and we work towards it, we collaborate and discuss, and we know exactly what is addressing, banks are not averse to regulation at all. We are not, because why is it there? It is to protect the institution.
Well, all too soon, Mr. Well, we have to draw the curtain down this engagement. I will wish for a part 2 on this one. Mr. John Dewar is the Deputy Chief Executive of the Ghana Association of Bankers, and very soon he will take over as the Chief Executive, or the Substantive Chief Executive of this association. I hope you've been convinced about what the association is doing to help actually extend credit to businesses. And let's see what will happen by the end of the year, or whether going through this COVID, indeed, more businesses will come out and say that indeed the bank stepped in when it mattered. My name is George Yafe. And that's all for PM Express Business Edition. I know the debate will still continue in your homes and offices.